You've got the rupee, which is continuing to weaken further. So now, as we speak, it continues to linger above those levels of 63 to the US dollar. So that's a one-week low. Remember, all through last week, that's the 11th to the 14th, you had the rupee, which continued to remain at those levels of 63. We did see some mild recovery coming about at the start of the week, but once again, we're down for the third straight day, shedding something like 1.1% in the last three sessions. Bond yields in the meantime, they inch higher, hitting levels of 9.12% in intraday trade, 9.09 as we speak. So it's at a two-week high on an intraday basis, getting over 17 basis points in just 1 week. Call rates, meantime, they continue to remain rather range-bound, 8.7 to 8.8%. Well, let's talk about that as well as lots more with K. Harihar, Treasurer at First Rand Bank, who joins in now on the show. Hari, the last time we spoke with you, you did say that if, the debt shows negative, if we do see oil demand coming in, that weakness for the currency is likely. Given that once again we're staring at levels of 63, what's the call now and what's likely to drive the weakness even further, if so?
I think right now, if you look at both the global and the local factors, the global factors, if you look at the Chinese developments, I think that's all emerging market positive and rupee positive. As far as the new incoming Fed governor is concerned, I think she's made extremely positive comments from an emerging market point of view, pointing out to the fact that they need multiplicity of data points to pull back. Though the market seems to have interpreted the FOMC minutes differently and is calling for a taper by March. I think locally, as we discussed the last time, I think the normalization process has started and the oil demand has clearly flown into the marketplace. The fact that we had two very soft days in the stock market also kind of rattled the market. So the last few days we've seen a lot of demand coming in, and this is not just oil demand. I think we are seeing a lot of corporate demand also coming into the marketplace, which is clearly evident from the fact that people are even buying 1 year forward dollars. So the forward premium for 1 year has actually gone to about 5 rupees and 25 paisa, which is a 1 year high, despite the fact that the rupee is somewhat in a stable range. So it's corporates deciding to hedge and not keep their bets completely open, plus the oil demand coming in. Market also nervously looking at the fact that while we had a nice honeymoon for the last 2 months with the double swap window open, the swap window is going to shut on 30th November unless it gets extended. So how will the market handle the fact that the $25 billion which would have come in 2 months is not going to come in onwards. So I think these are the ones which are keeping the rupee under pressure. Having said that, while in the very, very short term the rupee could see some more weakness, could probably head towards 63.50 odd levels, these are still very good levels for exporters to book their receivables because fundamentals have changed. Your trade deficit, which was 20 billion a month, has really dropped down to 10 on a very structural and systematic basis. So given that, I think exporter interest would come in, but right now short term rupee has a soft underbelly.
Yep. Well, it was for the reasons that the rupee is at 63 that we started the discussion with that. Otherwise, I would have also asked you about the new 10-year bond, because the belief was, at least until yesterday, that the coupon may be the highest since 2011 for the new 10-year bond series. So, I mean, what's your take on the same?
Okay, you get a hint of the new 10-year yield when you look at what is called the when issued market. So there is a market where you can actually buy and sell, before the issue happens. Now that market was showing the new 10-year at about 877, 880 levels, as compared to the old one, the current one, which is dealing at 910, 905, 910. Now, typically what happens is whenever a new paper comes in, the context is that when, the issue is very small, relatively speaking. So everybody wants to buy the paper, especially if you want it as a part of your trading portfolio. So an asset management company or a bank which has an HFT portfolio, the demand outstrips the supply and typically the yield goes down. Also, if you want your mark-to-markets to work, you need to move into this portfolio. But most of us believe that when the cutoff happens, it will start trading. I mean, wherever be the cutoff, the trading